Today is Sunday, tomorrow is Monday, one of my favorite days of the week because I get to see if I have a crystal ball after all to predict where AMC stock will end the week. Sometimes we are dead right, sometimes we are dead wrong, but this is going to be one of the most important price prediction videos that you guys have ever seen from me. Well, why is that, you might say? Well, due to the simple fact of we have a lot of the market that is reporting this week. Over 50% of the S&P and NASDAQ weighted stocks are reporting earnings this week, like Apple, Google, Microsoft, to name 3 of them. Those stocks alone control over 15% of the NASDAQ. So it's going to be a big week, and it will affect how AMC stock trades because after all, the markets trade off of 3 things: fear, greed, and fundamentals. They can also trade off of catalysts, but that more so falls in the fear and greed realm, right? Fundamentals are the key to everything. So we are going to get the numbers, the earnings for Q1 2022. Are we heading into a recession? Is the consumer okay? Are these stocks still doing very well? We're going to get a glimpse into that, and that is going to affect the whole entire markets. Now, did you guys know that earnings can be one of the best opportunities to amass a great amount of wealth in a very short amount of time if you understand how to trade earnings with mitigation risk strategies, right? You can play earnings and not really risk a lot of money if you know what you are doing. If you want to come learn how to trade earnings, how to trade stocks, how to trade different catalysts, what to buy, when to buy, obviously not a financial advisor, you are liable to lose all of your money if you trade options, and I cannot guarantee you any results over there. You could lose all your money or you could make a lot of money. But if you guys want to get all of my trades in real time, really learn the strategies that are involved here, check out the link pinned down below in the top comment. We are going to be raising prices for the first time ever starting on Monday. If you join before Monday, I am not going to up the prices on you guys. That will be your locked in rate forever. Lots of value provided there, and we are hitting some massive trades. So if you guys want to be a part of it, link down below in the pinned comment. But I will say, know the risk involved when you sign up. If you are inactive, if you set it and forget it, if you're not an active trader, if you don't want to be an active trader, probably not the best thing for you. Nonetheless, let's get into this video. We got a lot to talk about, and it's a very exciting week. So before we talk about what to expect for AMC stock this week, I will tell you guys that I cannot foreshadow any potential catalyst that comes out, whether that is good or bad. Now, I will say if a catalyst does come out, I'm sure it would be something along the lines of AMC is buying XYZ company. They're buying another stake. That's kind of what I'm expecting here. Maybe this week, next week, in the next month, or the next couple of months, we're going to see catalysts like that. So obviously, I cannot foreshadow that to you guys. If I could, best believe I would, because ultimately, I want you guys to have this knowledge and to make money. That is the name of the game. I don't care where it comes from. I want you guys to make money as long as you are not hurting anyone else. Now, with that being said, what is going to affect AMC stock? Well, it's going to be the broad market conditions. So what do we have in store for economic data? Because that's going to be one of the biggest things that affects AMC stock on a week-to-week basis. When the Fed talks, stocks usually go down, right? When different data points come out, CPI data, you know, stocks can go up or down, and it does not matter because AMC is on the broad markets. AMC does not trade in its own little bubble, so it is affected by these different things that we talk about here on these Sunday price prediction videos. Now, on Monday, you have no economic data that could move the markets. Virtually none that comes out for the U.S. economy. Now, on Tuesday, you do have CB consumer confidence. These consumer confidence reports and surveys are pretty important, and that's expected to be a high volatility catalyst. And that does come out at 10 a.m. Also at 10 a.m. on Tuesday, you have new home sales for March. That could affect a lot of your real estate stocks. That could affect the markets as well, because believe it or not, the biggest segment of the U.S. economy that is the most important for the U.S. economy and to show the health of the economy is actually the real estate sector, because no matter who you are, no matter what you do, Doesn't matter what you do for a job, doesn't matter anything else. Everybody needs a house, and that is people's largest asset. So it's very important. I don't know if it'll move the markets in a dramatic way, but that data does come out. Crude oil inventories, that will be important for oil. That comes out at 10:30 a.m. on Wednesday. On Thursday, I don't believe we have anything too crazy. GDP actually, whoa, that is a big one. GDP 8:30 in the morning on Thursday. That will be a big catalyst. If GDP comes in less than expected, it's expected to come in at about 1.1%. If it comes in less, you're definitely going to have a lot of pain in the markets on Thursday. 8:30 in the morning, that is initial jobless claims. That could be important. It could actually be a very bullish thing if, surprisingly, initial jobless claims come in higher than what we expect, because what you guys are going to see from initial jobless claims, from employment data, that the worse it comes in, the more bullish it could be for the stock market. Because after all, if initial jobless claims start to come in, higher, and people are like, whoa, a lot of people are starting to, make jobless claims, then the Fed might not have to act as aggressively. So you have that on Thursday. Thursday is going to be the big day for the GDP quarter over quarter number. That's going to be a wild one. Initial jobless claims as well. Both of those 8:30 in the morning. Friday, you have no data that could actually move the markets. You do have personal spending month over month, PCE price index, but I don't expect that to really do too much. What is going to move the markets will be earnings. And you do have on Tuesday, 3M, Google, UPS, Visa, GM, Chipotle, Texas Instruments, WM Waste Management, JetBlue, Raytheon Technologies, Enphase. Some of these stocks could move the markets, obviously. Microsoft, Google, Visa, GM, Enphase, Chipotle, Texas Instruments, QuantumScape, Skechers. All of these are going to affect different segments, or a lot of these are in different segments. So watch for the segment moves here based off of what is being reported. And obviously Google and Microsoft, very, very important to the overall health of the markets. And that's on Tuesday. On Monday, I didn't even mention it because all you really have is Coca-Cola and Activision for the most part on Monday that, could be important, could be big movers. Coca-Cola, because you're obviously getting a glimpse into consumer demand. Activision, because that's going to affect a lot of those gaming stocks. And you do have that buyout, which is now 2 or 3 months old, and that one could definitely move big as well. Now on Wednesday, that's going to be another big one. You have Facebook, or Meta, whatever you want to call it, PayPal, Ford, Qualcomm, Pinterest, Teladoc, ServiceNow, O'Reilly Auto Parts. Wednesday after hours. Wednesday pre-market, you have Boeing, Spotify, I was going to say Shopify, but Spotify, T-Mobile, Harley Davidson for all my Harley folks out there. That's Wednesday pre-market. Thursday is going to be the most important day because you have Apple, Amazon, Roku, Intel, Robinhood, Gilead that report here in after hours. And Apple and Amazon control well over 15% of the NASDAQ alone. So if Apple and Amazon really butcher earnings and they take massive beatings, the whole entire stock market is going to take a massive beating. It does not even matter if Microsoft and Google earnings are good, which I think they will be. Really, Thursday is going to be the make it or break it. How is the fundamental picture looking for the markets? Because believe it or not, right now, crazy thing I know, Apple, Amazon, Google, Microsoft, these are the stocks that are holding up the market. So if they take a big move down, they could start to match up with some of the other stocks that are down 30, 40, 50% in the past year. Now, things would have to get really bad for that to happen, but it is very possible. Apple is trading at very high multiples at about a 27 PE ratio, where something like Netflix is trading at 19 price to earnings, and something like Facebook is trading at 13 price to earnings. So Apple is really, I think, the one that could clap the whole markets, and that's going to be very important, and I'm going to be paying very close attention to what Apple says. and so is the overall markets. You do have stocks Thursday pre-market like Twitter, Caterpillar, Nokia, Southwest, MasterCard, McDonald's, Domino's, Eli Lilly, Merck that do report as well, but those won't be as important, but still, you know, it's going to be important what all of these companies say for their earnings. So that's going to be the biggest thing. Now, I am not so bullish on specifically Apple. You could put Amazon in this category as well, because why? They had a lot of their demand, artificial growth, pushed up dramatically. We can see just Apple's and earnings numbers have exploded in 2021 comparatively to 2018, 2019, and 2020, which were pretty stagnant overall. Apple earned in between 55 and 59 billion dollars of profits during these 3 years. It didn't not fluctuate any lower than 55 or any higher than $60 billion during these 3 years, so it was pretty stagnant. Apple was a lesser component of the broad markets because they were not as big. Well, what happened in 2021? Apple made almost $95 billion in profit. So that was a jump of about $45 billion. So Apple is a very large company now, and they are rewarded with a very high multiple. They are pricing in a lot of future growth at a $2.64 trillion market cap. If they start to disappoint, and there is something that, you know, investors do not like, this will bring down the whole entire stock market. And that's why it's so important for AMC, especially if you trade options in AMC, to keep all of this in mind. I think it's going to be very hard for Apple to really impress investors and give them a reason to value the company so highly, given 2022 is not going to be a great year for Apple. Let's just call it that. Now, if we take a look at the Ortex data for AMC stock, we can see that over the past week, you had 108 orders totaling $106 million, positive order value of 75% for AMC stock, 75% positive order value. In the options market on AMC, considering the week was a very red week for the broad markets, one of the worst weeks that we have seen in the last 2 years. Believe it or not, one of the worst weeks we've seen in the past 2 years. Was this positive for options on AMC? I think it's a really, really good sign overall. Now, the short interest, obviously shorts have not taken a break. The short interest is sitting at 19.19%, and we'll have to wait and see when the exchange reported short interest data does come out. You know, I would take these with a grain of salt right now. We know the short interest is actually a lot higher than this, but this is what Ortex is currently giving us. We are looking at 98.91 million shares that are sold short, cost to borrow max of 2.73%, share utilization of 100%, and days to cover sitting at 2.34. So all of this Ortex data looking very, very good. Things are not looking so good for the short sellers and the institutional investors with those short positions. Like we've went over many, many times, liquidity is drying up. If those motherfuckers need a bailout, nobody is coming to bail out individual hedge funds, given the state of the economy, the worries about a recession, and the interest rates climbing through the roof. If you guys have not seen my video on all of this information that I just said, go check that video out. Came out yesterday. It provides you guys the whole backstory. It's titled "The MOAS is Close, but Not Quite Yet." So, or coming soon, but not quite yet. Something along those lines. Go watch that video. That is very, it's longer, but it does provide a lot of perspective on why I think the MOAS will really happen end of summer towards the fall time. Now, as far as AMC stock on a technical basis, we really need to break out above the 50-day moving average, and that's sitting at $18.59 per share. If earnings are bad, if things are not good for companies, AMC stock will not go through a substantial rally unless we see a catalyst. Now, I will give the markets the benefit of the doubt. If we do see earnings are good, there is really that fear of a recession, fear of economic slowdown start to subside a little bit, it is very possible that you could break above the 50-day moving average, go as high as $21 per share. That's what I would expect. I would expect to get some resistance around there. Why am I saying that? Well, because the 100-day moving average is currently right at $21 per share. So if we break above the 50, just imagine it, break above the 50, you're probably going to head to $21 per share. The 100-day moving average is currently at $20.93 per share. You will get some resistance in there, and we might ping pong off the 50-day and the 100-day moving average. That would be my bullish range for AMC stock. Again, unless a catalyst comes out that I cannot foreshadow for you guys, then we could be talking about something totally different. If earnings are bad, then I want to watch the $15 level to the potential downside. If we can hold 15, that's going to be really good. And on Friday, we held up very, very well. AMC stock showed a lot of strength, even in after hours. The broad markets went down 0.42%. It was not good. AMC stock performed better than all indexes by a long shot. Not even close. AMC performed much better than the Dow, the NASDAQ, S&P, and the Russell 2000. But still, if earnings are bad, watch 15. If we get a flash crash like event that does happen, watch that you really like $12.50 level. That's going to be the most important level to the downside. We did hit that low at $12.90 per share, but if earnings are bad, that could be fuel on the fire to really send us down lower in the broad markets. And I'm not so sure that we would fall that much in AMC stock, but I would really watch that prior low that we've seen at $12.90 per share. Call it $13 per share. So that's really what I expect, either in between 15 and 13 to the downside if earnings are really bad. If earnings are okay or even good, then I would expect a move back to about $21 per share. Those are the key levels, and that is what you need to know. More so on a technical basis. The MACD is extremely bearish. The RSI is at 41.25. Definitely due for a move to the upside. This thing is just continuously going down, heading into severe oversold levels. So that's really what you guys need to know. Just for some added details here, let's throw up the max pain and see what that says. You know, earnings are going to be the biggest thing, but you know, still, this is important in my view. Max pain is $18 per share by the end of the week. Again, if you guys don't know what max pain is, that is where the most money is lost by option buyers. That is the max pain, $18 per share. The Stock O tracker data is sitting at a whopping for this week, about 2,000 calls that are in the money, 76,000 calls that are out of the money, 13,620 puts that are in the money, 20,541 puts that are out of the money. So obviously biggest things are going to be earnings and how the markets take those earnings. If they are bad, then I would not expect AMC stock to rally out of nowhere unless we had a catalyst. If they are good, then I think AMC would be a prime stock to see a major rally. Given the price action that we seen last week and the way that AMC stock really held up, you know, Wednesday, Thursday, and Friday, I was honestly very, very impressed with AMC. On a day where all indexes closed down almost 3%, usually AMC would have been down 5 to 10%. We were only down about 2.3%. Very, very strong day. Now, leave your price predictions for the end of this week down below in the comment section. I would love to hear your guys' thoughts on AMC stock and the broad markets heading into this very important week. Hit the like button, subscribe to the channel, come join the trading community if you guys want to be a part of all of the action over there. Thank you guys for watching, and I will see you in the next one.